Yeah, please.
Ma'am, are you all right in there?
Yes, I'm perfectly fine.
Your husband says you're having trouble with the lock.
He's mistaken. The lock is working just fine.
She's joking, just open the door.
Ma'am, are you saying that you've locked yourself on purpose?
Yes, that's correct. Now could you please leave my sandwich next to the door and step away?
Ma'am, are you in any danger?
What? No, she's not in any danger. Shweta.
Ma'am,
Hi everyone, welcome to India Now. Let's cut across to the conference call where the Tata Steel ThyssenKrupp merger has finally been confirmed. Kaushik Chatterjee speaking.
Our external debt of about 2.5 billion euros into the joint venture company, and with identified synergies of 400 to 500 million euros, this makes the credit profile of the joint venture very healthy. The transaction capital structure, as I mentioned, is framed to ensure a strong and sustainable financial foundation, and that will help in facilitating the implementation of the joint venture strategy and create value for all stakeholders. The joint venture will be managed as one company through a holding company headquartered in the Amsterdam area, and it will have, as per the laws of the land, a two-tier governance structure comprising a supervisory board and a management board. Both partners will have an equal representation in the boards. Until closing, the ThyssenKrupp Steel Europe and Tata Steel in Europe will continue to operate as separate companies and as competitors. Only after closing, ThyssenKrupp Steel Europe and Tata Steel in Europe will be integrated as one company. I would also like to make a few specific comments in some of the media reports happened over the last night. This joint venture is, as I mentioned earlier, a 50-50 joint venture and not a 45-55 joint venture as reported in some parts of the media. Only at the time of the IPO, based on the affirmative right that ThyssenKrupp has, the JV company will issue warrants that will convert into equity, and effectively they would have the first 10% monetization right, and the market will pay for it. So the governance of the company will be on a 50-50 basis, including representation on the boards. The synergies we've talked about, and you would see it in the presentation, of about 400 to 500 million, has been arrived post the due diligence and framed by the clean team of both companies along with advisors as part of the joint business plan, which largely refers to cost synergies, procurement synergies, overheads, and better asset utilization network. I would also like to mention that the long process of multi-jurisdictional consultation in the UK and in Netherlands and in France, in our case, has been completed successfully, and therefore there are no such conditionalities in the joint venture. From a Tata Steel point of view, it obviously creates a sustainable footprint in Europe. The combined synergies have a huge value potential, and on deconsolidation, the Tata Steel balance sheet effectively reduces its debt profile by roughly about 2.5 billion euros. That's primarily the deal structure. I would like to request Narendran for his comments.
Yeah, thanks, Kaushik. I think Kaushik has explained the context and the transaction. All I want to say before we open it up for questions is that this is another step forward for us to create two structurally strong businesses. In India, we've always been structurally strong, and with the recent acquisitions and the expansion in Kalinganagar, we are setting ourselves up well for the growth opportunities in India. In Europe, with this merger, we are creating a structurally strong business which is self-sustainable, and that is very important. Thyssen is also a technology leader. Tata Steel Europe also has made a lot of headway in providing quality products to discerning customers, and we believe this partnership will help us serve our customers in Europe better and be more ready for the kind of demands that the customers will have in terms of technology and R&D and the investments that we need to make there. So, in essence, Tata Steel today, I think, has moved another step forward to creating strong, structurally strong businesses in two important geographies. With this, I hand over to you for the question and answers. Yeah.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Ritesh Shah from Investor Capital. Please go ahead.
Hi sir, congratulations for this one. So my first question is on the capital structure. You indicated issuance of warrants to Thyssen. So how much will be the economic interest at the time of IPO? Will it be 60-40?
No, it would be about 10%, so it will be more about 55-45.
Okay.
But that will happen on specifically triggered at the time of the IPO. It is effectively like a warrant, but it remains dormant till an IPO is triggered.
Okay. And sir, how should one value this 5% stake at the time of the IPO? Like, how should one look at it from a valuation perspective? Like, there's a time value of money element involved over here.
Yeah, but that time value of money is not paid by Tata Steel. It's paid by the market effectively. And the valuation of that would effectively depend on the equity valuation of the enterprise at the time of the IPO, whenever it is triggered.
Okay. And sir, when we say this EV, does it include the synergy number?
We talked about the synergy number. We didn't talk about the EV number. We only talked about the synergy number of 400 to 500.
Sir, when you say 55-45, it will be on a particular EV. So does this EV capture the synergies which are expected at the time of IPO?
It depends on when the IPO is held and how much synergies has been realized and how much is definitive to be realized. And as far as that's why I said that, this is a 50-50 JV. You need to look at it absolutely from that perspective, from an earnings, from governance, from cash flows, from dividends, whichever parameter you were to apply, it is a 50-50 JV. This is an inter-se monetization allowance, so to speak, at the time of the IPO to be paid by the market. They would first have the ability to go with the first 10%. If the IPO, as is mostly the case in most international markets, if you have to go for further liquidation or capitalization, that amount will be mutually decided at the JV company level by the two shareholders, and how much will be primary, how much will be secondary, all of that questions will be answered by the JV company. But the first 10% is a secondary offer of by TK into the market. That's how it gets triggered.
That helps. So second question is on synergies. I understand the quantum has been, the higher end of the band has come down by 100 million. So that is one. Why is that so? And secondly, the timelines to realize the synergy quantum.
So I think you are referring to the time when we announced the MOU. We said 400 to 600. That was based on a kind of a rule of thumb basis. What we have currently is a more specific plan, which is determined by the joint business plan, which has come out from the joint venture process, where the clean teams of the two companies have engaged in a far more details. And we believe that 400 to 500 of synergy, it's not a limiting factor. There will be synergies even more when we get in. But, clean team restrictions apply as far as seeing sensitive data of each other company is concerned. So therefore, it's a 400-500 assessment, which is a more definitive assessment. It will have, I'm very sure that as we form the JV, we will realize more synergies as we go in. So that's where we are. I think the timeline kept is a range of 2 to 3 years within which we should expect to realize a substantial part of these synergies.
Thank you so much, sir, and good luck.
Thank you.
Thank you. We take the next question from the line of Pranav Tendulkar from Rare Enterprise. Please go ahead.
Hello. Thanks a lot for the opportunity. Can you tell how much debt ThyssenKrupp has shifted to the JV? That is my first question. And second question, so I understand this, but just want to reconfirm that then this debt, that is about 20,000 crore rupees, it will not have any recourse to Tata Steel standalone parent, right? So these are the two questions. Thank you.
As far as debt from TK is concerned, there is no debt, but there is liabilities, and these liabilities are significantly and substantially pension liabilities for the steel company. As you may be aware, in Germany, they have unfunded liability schemes. That part of that is accounted for in the EBITDA, and that's the liability, which is about 4 billion euros in total, including some of the other liabilities. It was meant to be a non-cash transaction, and that's why the valuation adjustment was done through liabilities. As far as 20,000 crores debt on the JV is concerned, it has no recourse to Tata Steel.
Mr. Tendulkar, do you have some more questions?
Yeah, no, I'm done.
Thank you. We take the next question from the line of Dhaval Joshi from Phillip Capital. Please go ahead.
Hello, sir. Congratulations on this event. Sir, at the time of signing the MOU, you did mention that there's going to be some working capital debt which could get transferred, and we'll get a much better idea at the time of signing of the agreement. So, can you throw some light in terms of what would be the working capital debt which can get transferred to the JV?
Yeah, so the working capital, there would not be working capital debt as such, but there will be working capital that will be transferred, and for which we will provide lines from the JV into the individual operating companies to fund the same. We have, for example, 300 million for the UK business. That's kind of identified. The rest of the businesses, the two hubs in Duisburg and in Imaudan actually do not need working capital funding because of their positive cash flows. So at the time of the closing of the transaction, which will happen after the merger control clearances, we will do a completion accounts, and that's the time when we will know the exact number. Just now we have agreed to provide about €1.5 billion of lines, but that's not necessarily to be drawn, because both Imaudan, Tata Steel Netherlands and ThyssenKrupp Steel do not require those lines.
Okay, this is 300 million euros or pounds? Sorry, just for a clarification.
300 million euros.
Euros. Okay, so this essentially will get transferred to the JV, and the JV will pay us this 300 million euros. So, in effect, our net debt goes down by 2.5 billion euros plus the 300 million euros.
No,
Correct me if I'm wrong.
No. What we are saying is we will provide a dedicated line of 300 million euros for the UK business from the banking lines of that 1.5.
Okay, of this 1.5. But if I were to look at it before the JV, we had working capital debt also for the UK business as well as for the Netherlands business. So in the European business, there was working capital debt. And given there will be some working capital which will get transferred because it's an ongoing business which is getting transferred, there has to be some working capital at the day of the completion of the JV or the formation of the JV. So what happens to that? I mean, and if I'm not mistaken, you had given a number of 17,000 crores which could either get serviced through dividend or get transferred to the JV.
So let me break this up. One is, that's what I said, that completion accounts will realize what is the normalized working capital requirement at the time of closing, because that's when this transfer will happen. And the net number will have to be transferred. So it could happen that there is a working capital. If it matches, then that's fine. The 17,000, I presume you are mentioning about the number that is there in Singapore, which is in our holdco. That I continue to maintain that it will be serviced through the dividends of the JV and repaid through the dividends of the JV. And that's the plan, because we have already refinanced it on a longer term basis. as far as the working capital is concerned, all that I can say now, pre the completion accounts, is that whatever will be the normalized level will go into the JV. If it is beyond the normalized level, some amount can come back, or we will have to fund both parties.
Okay, so there's no number to it as of now.
No.
Secondly, sir, what is this environmental risk liabilities which Tata Steel will have to bear, and what is the quantum for the same?
So I think I also read somewhere that this is somebody has commented about. See, I am sure you would understand that in case of any transaction of this nature, there are indemnities that are given by both parties. So we've given indemnities for past environmental issues that could potentially come or may not come, and we've got similar indemnities from the other side in other areas also. So these are indemnities that has been covered. There is nothing that I can say at this point, because a lot part of it also has been provided for. So whatever is provided for, whatever is captured in the business plan has been already been covered. And if there is any unknowns of the past period, then when it comes post the adjudication, post crystallization, we will have to have an arrangement. It can happen on both sides. So that is what it is. So I don't know where this has come from, but I saw this in the morning and somebody has commented about it.
So no specific liabilities which are going to be borne as of now. Right. Okay. And so can I squeeze in one more question if it's fine?
Sure.
So the pro forma EBITDA with synergies which you have mentioned of 2 billion euros, if my understanding is correct, you had mentioned when at the time of signing of the MOU, it was 1.6 billion euros plus 400 to 600 million euros of synergies. Now, if I look at that 1.6 billion euros, that itself has moved up to close to 1.9 billion euros, trailing 12 months of March. So, are we still continuing with the old number and we've just added the synergies, or
yes,
do we need something else?
So essentially at the time we had said 1.5, that was the previous 12 months. I'm not wanting to confuse you because these are all indicative numbers till we start actually realizing the value. In Thyssen's case, there has been an improvement in the numbers, and therefore the pro forma pre-synergy numbers have obviously moved. We are maintaining that too because it works as a reference point from what we had disclosed in the past in September.
So anything other than that, right? It's just the old number which is getting.
I wouldn't be happy to depress it unnecessarily.
Thanks a lot. If I have more questions, I'll come back.
Thank you.
Thank you. We take the next question from the line of Amit Dixit from Edelweiss. Please go ahead.
Thanks for taking my question, sir, and congratulations for this event. I have two questions. One is that according to some media reports, there was a potential curtailment of dividend for some years. So from the presentation, it seems that it is no longer the case. Dividend, if any, Tata Steel will continue to receive in the proportion of, the proportion that you have in JV, that is 50%. So is the understanding correct?
Absolutely.
Okay.
See, there were some people who were negotiating outside the room. I cannot back them up.
Sure, sir. The second question is that, in case of, in slide number 5, apart from this 400 to 500 million euros, you have mentioned that there might be some working capital and capex effects. So, what are these, and is it possible to quantify them at this stage?
So, I'll give you the principle. Obviously, if it was quantifiable, I would have given a range. But see, effectively, there are situations where you, from a working capital perspective, for example, both on raw materials as well as on finished stock. Today, each hub of Tata Steel Europe as well as in TK, they have their own working capital measurement requirements and levels. When you become one company, and I think that's what's most important, because we have said that this company will be run as one company, one cash flow, one balance sheet. That's been the principle from the day we've been negotiating. And in that, there will be synergies where you don't need to have the same, for example, SKUs in everywhere. There will be opportunities to rationalize working capital requirements both on raw material as well as finished goods.
presented by